What's up, StockTwits Nation? Shout out to Elon Musk for fixing Twitter for us. That was touch and go for a minute, wasn't it, Shy?
I mean, can you imagine the pre-market's as bloody as it is after a long weekend, seeing crypto kind of deteriorate, and now Twitter doesn't work, so you have no access to news? Like, it would have been a bad combo, so I'm happy to see it fixed.
Yeah. Well, luckily, StockTwits was up and running. StockTwits did not have any downtime, so noted. And we're here to kind of bring you guys into the week. It looks like it's gonna be another weird one. Shy, how you making any moves this morning? What's the outlook on your end?
I made some major moves right before the weekend, and some of the moves I made was I'm getting defensive. We, as you guys are aware, like we QQQ, which is the Nasdaq ETF, broke through their 200-day moving average SMA level, which is 493. Right now, they're trading pre-market at 484, and typically this is the first time it's occurred in more than geez, 2 years ago. And essentially, that's when the rally began in tech. It was the beginning of 2023. And the 2 year rally we've experienced has just been explosive to the level of like it was somewhat unsustainable to have another type of 2025 performance like we had in 23 and 24. I called out in the beginning of the year. You guys are all aware of this. If you guys follow the stream every morning, this is not the year to be in big tech. I I predicted the breadth would widen towards software, small cap, but really big tech is treating this year as an investment cycle. And what comes of that is margin compression, and it's the death nail to any shareholder value. QQ sliced through that 493 level, and when it tried bouncing during like the not I want to don't want to call it a dead count bounce, but somewhat of a recovery bounce, that level became a resistance. And once I saw it start feeding from that level resistance, I was like, oof, I think we were about to enter a stage four breakdown on the charts. And I was like, I need to get defensive. And my portfolio management's very different in a defensive like environment. I will never ever experience a 2021 again in my life. Like I fully have a couple gray hairs in my head, got from that experience. My chest got a lot hairier from that experience. Like I can't afford another 2021, and I'm going to get defensive. And I bought some hedges Friday before the bell, and I also my portfolio moves going forward are going to be a lot more defensive. I'm not going to be as willing to buy my more speculative positions, my smaller mid cap names. I'm not going to be as aggressive when I think they're undervalued because I'm I'm getting defensive in the big tech indices are breaking down. So I'm going to go towards allocate towards the safer plays in my portfolio, the ones with defensible moats, usually the larger cap companies. But that's where my eyes are going towards in the near term, as long as we're below the 200-day moving average.
It's so funny whenever you say you're getting defensive because, like, I'm Italian, I'm always defensive. So that's just, the status quo. What do you think about like dividend growth stocks? Is that part of your defensive strategy? How do you think about those guys?
So it is not for me specifically because I believe we're still in the early innings of the fourth industrial revolution. So like I still want exposure and the names who are winners in that space. But for the vast majority of investors, like I don't think it's time right now to. I don't know, it's all about time horizon. For dividend investing, like that is somewhat defensive where you can make some capital while the market figures out their issue. Because right now it's just figuring out it's a noisy environment. You never know when it's going to recover, but it's noisy and it's breaking down. So if you want to allocate capital, like I think those dividend plays are really important during these times. Try to get defensive, but for me, I am just so bullish on the fourth industrial revolution that I want to infuse capital into the winners, the safer winners, like the Amazons, for example. Like it's more than $1 trillion company. I'm a growth investor. That is my defense stock, my beach stock, because there is a high floor on that name where like I don't think it's ever going to go below $100 again. It's 150 maybe, but that's a steal. I don't think it's going to go in 120, 130. So like I think there's a high floor in the names like Amazon. Another one I've been adding it, Intuitive Surgical. Like I want to build that position. So like that's a
What do
defensible
those guys
moat.
do?
Robotic surgery. So if you guys
Oh,
aren't aware of what they do, their Da Vinci product is absolutely the go. I'm looking up some my notes over the week because I did a big deep dive on Intuitive Surgical over the weekend. So you guys are like fully aware that I am a thematic investor. So I am hyper bullish on robotics as one of my themes. I think that's going to be the kind of the biggest, one of the biggest TAMs in mankind's history, because truly the world is their TAM. And the angles I like to have exposure in robotics is Tesla through real world AI or workforce robotics. You have Amazon, which is quietly leading the logistics robotics, and you have Intuitive Surgical, who is cementing themselves as like the dominant force in robotic assisted surgery. So a lot of people think that they just sell the hardware, but they actually have a full ecosystem. Like they lock all their hospitals into their full ecosystem. They have around 8,500 Da Vinci systems in the hospitals worldwide. They're not just selling the robots, like I mentioned. Like they sell the whole ecosystem. Hence the theme that I love investing in stocks with an ecosystem around their hardware, because that's one of the biggest defensible moats out there. Axon has that. Intuitive Surgical has that. Amazon has a massive flywheel. We all know Apple. Like Apple really is the app store around selling the iPhones. Like these kind of ecosystem creates defensible moats, and it's one of the stickiest competitive advantages that you can have in a long-term winner. And I think a lot of times, I think it's really important to know for Intuitive Surgical specifically, where 80% of the revenue comes from recurring sources. So like you kind of need, you buy the robots, but you constantly have to buy the surgical instruments for those robots. You have to buy, there's service contracts associated with it. And there's also all these accessories that the hospitals need to continue buying to maintain these millions of dollars they spend on the robots. They have to do it, or that's going to be dead capex costs. They're just going to have to continue to maintain this the robots, and that's high margin cash for Intuitive Surgical. And I think the biggest difficulty for them was just getting into the hospital space. And they did that already with that 8,500 Da Vinci systems in hospitals already. They continue to update the latest and greatest robots every couple years. So I think they're just, as society gets older and older, I do think that like these kind of robotics assisted surgeries are going to be kind of the future that we're trending in, because it just, there's not enough surgeons out there, guys. Like there just isn't, and I
No
think
one wants to be in that much debt.
yeah,
You know,
it's
it's like,
like why? But I think the lack of passion is the issue for people going to med school now. Like you needed
yeah.
that kind of level of passion, and it just isn't there anymore. And I think as a hospital system, like the business economics isn't as great as rosy as a lot of people think. So like the best way to cut costs, like 15, 30-year timelines, is these robotic surgeries, because surgeons are stupid expensive. You have to increase their pay year after year, their benefits year after year, and like it's just a crazy world we're about to enter. But like this is I love this robotics angle, and to be honest, Tesla and Amazon, like that's one component within their own ecosystem. That's robotics. I wanted something that's more pure. That's Intuitive Surgical.
Yeah, I love it's just interesting to hear. You hear a lot of people thematically interested in robotics, but in your mind, you're like breaking that down into robotics in this area, robotics in this area, like
Mm-hmm.
sub winners. I want to talk about Tesla because I wrote about Elon Musk in my newsletter this week, and I kind of dogged on him a little bit, but not really. Um, but obviously, there's been a lot of coverage about Tesla's stock price, car sales. And my question I posed in there was like, do you think he's kind of over the whole car thing? And now he's views Tesla as something completely different, meaning he's all in on robotics and AI, and like the car stuff, he could give a damn.
He is. Like, I think we mentioned on here, we talked about last week. I think this is probably the ballsiest move he has made in his career, is what he's doing right now, because he's absolutely sacrificing the EV business to fulfill his autonomy vision. And if it works out, Tesla is going to be a massive winner long term. If it doesn't, he's going to have a lot of capital he's going to have to earn back from essentially sacrificing the EV business. Like that's what he's doing clearly right now. He's just putting all his eggs in the AI and autonomy basket. And I think that's okay for me specifically, because I invested in Tesla because of their software, AI, and autonomy. It wasn't because of them as an EV company. If it was, the stock is extremely overvalued if it's just an EV company.
Yeah.
And this is kind of the short-term pain for the long-term gain. You're sensing a trend also with like what Trump's doing, the U.S. government's initiatives, and how the U.S. he's sacrificing U.S. GDP for long-term strength. Elon's kind of doing the same thing on his business, sacrificing EV company to fulfill that long-term AI vision. And it Tesla's shift does begin this summer with autonomy. And it all rides on their unsupervised FSD launch in Austin. I think it's supposed to happen this summer, and I think once Tesla can prove that its FSD system can operate safely without human oversight, I think that's the inflection point of like nobody will care at all about the near term EV hurdles because they just validated autonomy and they did it in a way that is highly scalable. That's something that Waymo can't say. That's something a lot of the competitors can't say with how they're trying to tackle autonomy. Tesla's trying to tackle autonomy with scale, but it comes with the greatest risk. So if they can prove any success this summer, Austin, it's going to cause a massive re-rating in stock. So I think they're in a prime position, for example, to license their FSD technology, which again, the business econ of being a car company and an OEM is like 20-25% gross margins. If they can license their FSD and become the status quo of autonomy across the board for the whole industry, that comes at 70% software margins, and it comes
Yeah.
with recurring software revenue. Like it's a game changer for the business model.
So you think more than robotics hardware, it's they're evolving into a SaaS player?
Exactly. I think it's transportation as a service is how I like to
Interesting.
call them. Yeah.
Yeah, I mean, I think it's interesting, and I'm curious what you think as someone who's in it of like how far away is it that they're going to be able to recognize any revenue from this stuff? Like, how far are they away from go to market? Are they already starting to sell, or you're saying they're in the testing mode now, and it's almost like a biotech where they're in the trials?
There's rumors or there's some commentary that they think they can recognize some revenue this year from FSD. I'm underwriting second half of next year. So that's where I'm going to be expecting some revenue to come through. And I think he needs to produce somewhat of FSD revenue in the next 12 to 18 months. He just has to, or he loses the narrative. And we all like Elon's he he bats 100% on a lot of the things he does. His time windows are always just so off, but it's fine. Like he disrupts things. You don't know the timetable on when you disrupt decade-long trends, and that's what he does. He constantly just disrupts industries and becomes a status quo. Like you can't put a timetable on that. So I do think the market is a forward-looking mechanism. So if there is any kind of hints of FSD revenue next 12 months, like actual tangible evidence, the stock is going to reflect on those future expectations. And that's when like you don't have to wait till like the month they actually make the FSD revenue. You can buy a year in advance if there's clear signs of it. And you see stocks get re-rated, and that's what sell the news by the rumor type of narrative is, where people usually hold into the actual events, like actual proof of the earnings cycle, earnings report, like FSD revenues coming in. Usually the stock's priced in already for that. So like it isn't really that time to buy. So that's why like I added 20% actually the past month to my Tesla position that I got into like the 160s, 180s, because I do think the moat has expanded since then, but it's somewhat risky. And like Tesla is not part of my defense strategy, and that's the issue. Like it's more kind of speculative. So like I don't want to be adding too aggressively because that's not part of my new portfolio management strategy
Hmm.
for this environment we're about to enter.
How much of that do you think is going to be government contracts with the software? Like, do you think because that my brain goes to like, yeah, is he positioning himself? There's more upside on selling SpaceX, selling the SaaS. Like, I think you're right. Like, he's thinking like 20 years ahead, not 2 quarters.
Hmm. So I think there's gonna be hurdles and regulation that he's gonna be able to streamline in a Trump-led presidency. The flow of dollars might be tricky, just because I don't think this cabinet likes that space as much. It's to be honest, like I actually think that maybe that's the upside surprise that if there is actually government flow. But for me specifically, I think that there's going to be able to streamline the regulations so he can, like once he proves it in Austin, it can be streamlined federally a lot easier. And I think that's like the TAM expansion opportunity that's going to be just as good as the government flow of dollars because I think a lot of partnerships are going to be had then in that case where You're seeing a lot of Waymo partnerships, and I think that the Cybercab network will get start getting accelerated drastically if they can prove validation of FSD this summer. And maybe there's some government flow that goes towards Cybercab network on the infrastructure component of that, and that might be an interesting angle to it. But yeah, I don't know. It's crazy times we're about to enter, and like historically, every time it's been this noisy about any kind of new tech on Tesla, it's been the buying opportunity. Just look at 2017, 2018, for example. Like that was a great buying opportunity long term if you think about it. And this is the type of name that runs really hard once it proves like their technology. So yeah, it's crazy times to be in. It's exciting, but somewhat dangerous.
Yeah. It almost feels like, I think we were talking about this maybe a few days ago. Like everything just feels like pro wrestling, and like it's part of the narrative, and like it's not just about being well liked anymore. It's just about being relevant, and he's very good at being talked about. I don't know if you saw SNL. They have Mike Myers doing him now, which is
Loved it.
so
Yeah.
good. And you know that just pisses him off to no end. But sticking in DC for a bit, I know we have a Financial Times article out saying, you know, the economy is heading for a recession. That was an opinion piece, of course. But then you had Howard Lutnick on Meet the Press saying, absolutely no recession's coming. Like, there's something you don't want to say definitively in a clip that could come back to you. But what do you think Lutnick's angle is there? Do you think he's just being like a good company man? Or do you think that we're already kind of in it?
So it's a loaded question. I love that question. As you guys are aware, I'm more of a micro guy. I focus on disruptors early in trends. I'm looking up that quote right now. I think we've been in a recession for years. That's like my take, and I think it was somewhat masked by a lot of like the government spending. That government spending, that faucet has been turned off clearly with Doge,
Mm-hmm.
and I think now that a lot of folks are realizing how much of a recession we've been in, and it's getting re-rated because of that. And you're seeing a lot of the labor market kind of going through that massive shift. February brought 170, 180 job cuts. Like that was the biggest reduction in, I think, close to 5 years. I think that's now year-to-date layoffs have been 230, 240,000 total. That's the highest that's the highest quarterly layoff in I want to say it's been like 15 or 20 years. So I think this is just you'll be able to now remove that mask that's been hiding the recession to like, wow, we're actually in a really bad recession. The ripple effects are going to be devastating. You're already seeing it right now what the Doge and the government driven restructuring initiatives have had in the Washington D.C. housing market. Like it is all the government employments has caused that whole market to crater. There's thousands of like high income federal workers now are now without jobs, and
Yeah.
and they're trying to move, and housing prices are plummeting. I think that another factor is it's surprising people. A lot of people are surprised of how much the government is feeding into so many different sectors and industries for years. Like it's like a lot of the software companies, for example, like the government uses them, but do they actually use them,
Mm-hmm.
or they use them initially and then they just kept it? Okay, we're not going to change it. We bought it and we're going to pay that monthly, yearly fee. And now we're realizing only maybe 5% of those contracts are actually being used today. So now
Yeah.
they're cutting those contracts. And I think that's a perfect example of like what's kind of occurring right now where the government was asleep at the wheel because they were I don't know, they're just like, so you can say they're just so wealthy or just like the biggest powerhouse that they could care less about doing the admin type work. I call it the admin type work. Now the spotlight's on that admin type of work. You're trying to finesse what or just massage efficiency into something that hasn't been touched in decades. There's going to be disruption, and I think right now it's good for long term for the country, but short term, any kind of like it's like you're trying to lose weight. Like if you gained 40, 50 pounds over the past like 5 to 10 years, it's going to be really hard the initial phase to shed that weight. You're going to be healthier in long term, but the first phase of that is going to be it's gonna be tough, and you're gonna be cranky, hangry, etc.
Yeah.
I think the government's just going through a hangry phase right now because they're trying to get through the first phase of it. And once they do, it'll be great. But like we're in that hangry phase.
Yeah. I mean, I think you bring up an interesting point in that, like, if I'm selling enterprise SaaS, my dream client is like a government entity that's
Totally.
not looking at the books like on an annual basis, being like, where are we wasting? Like, that's the best recurring commission you could probably ever get. And so that is interesting, like how many of those exist and they stack up. The map you referenced of the housing market in DC is insane.
Mm-hmm.
Kind of scary to look at. And then you think about all those the communities around DC, like Reston, Virginia, all these places that is all tying in. It's not just DC proper; it's kind of the entire region. It's going to be very interesting to kind of watch that unfold. But what you're saying is basically they're coming in with a shot of Ozempic, and it's going to take a little bit. But you know, that long term, you think that's going to be kind of flush out the system of some waste.
Yeah, I mean, to be honest, like I think, I don't want to steal his metaphor from someone who said it. I mean, I think it was Chris Patel. He did an incredible post on like the metaphor of what's exactly happening over the weekend. I'm gonna read it right here. Oh wow, it did really well too. It well deserved.
Put
The
up
U.S.
numbers.
Yeah, I'm gonna read the quote right now. The U.S. has been the rich guy who pays the bill at every dinner. Everyone loved him for it. He was putting in his credit card and is now overwhelmed with monthly payments because the credit card issuers raised the interest rate. At the end of the dinner, the bill arrives, and everyone looks at the U.S. wondering why he isn't paying. The U.S. says, "Sorry, I only have enough for myself. Could you repay some of what I've been spending on you guys?" Now everyone turns on the rich guy, calling him a dickhead, and now everyone's like, "Why aren't you doing what you've been doing?" Like type of thing. That's the kind of psychology. I think he nailed it. Chris Patel, if you guys don't know his account, but I think he nailed it. That's like have been expecting the U.S. to continue to overly um, be generous like they've been, and now fiscally you can't be as generous as they've been. So then they have to kind of cut it back a bit. And people are going to think they're being aggressive, they're being disruptive for unnecessary reasons. Like no, like they've just been the nice guy for too long. Now they have to be the fiscally responsible guy.
I mean, you might be one of few people who label the United States as the nice guy, but I would say if we're going by our version of things, for sure, we are the heroes of the world. But I think that's I love when people are able to do that, take a scenario that's happening and put it into just
Totally.
it's such a good one. Like, yeah, you got one person who's always picking up the bill, and then one day they don't. You're like, what the hell?
Mm-hmm.
It takes a little bit to get used to. Let's turn to crypto real quick because they had that summit, the summit on Friday. It was 20 minutes long. It's kind of weird. I loved Ben and Emil had this amazing clip up of Saylor. Like whenever someone asks him a certain line of questioning about Bitcoin, he does this like epic sigh before he like launches in. And you guys got to check it out on their Twitter. It's hilarious.
Yeah,
But
I was
there
gonna
was
say, Keith, can we play it? Oh, perfect.
yeah.
Why don't you break this down simply for people like me that don't fully understand it?
Okay. You were if you went out the yield curve on bonds, though, if you went in.
Sure.
What is that?
do is constantly growing.
So like I'm gonna start doing that. I'm gonna like need that to be my thing. There was also some footage of him allegedly flipping off one of the Winklevi. TBD if that was real or not. But Bitcoin, I know you're not a crypto guy. Bitcoin fell on the news. One thing that's interesting that I picked up in this clip at the beginning, and I also saw this morning when I was watching a popular news network, is a lot of these heritage anchors will like fully be like, I don't know anything about crypto. And this morning I was thinking of like, how long can they do that? Right? Like how long until that needs to be part of like, you're not in it, but you understand it. There was a guy this morning that was basically like, I don't know anything. Like, and I was thinking like, eventually you're going to need to have that knowledge to do that job. Right?
So I think first off, Michael Saylor, what a character. Can you just imagine if Jerome Powell did that every time in every press conference for the Fed Reserve? When are you going to cut rates? That's just so crazy to me. But I think a lot of those kind of legacy folks, I think they can't understand disruptive technology if they don't experience it in their everyday life. So I
Mhm.
always said that crypto isn't going to really take off as much as it should until consumers can buy Starbucks with it, until consumers can buy Chipotle with it, or I don't know, they can finance their Apple iPhones with something on the blockchain. Like I think until it becomes so intertwined, uh, involved into our consumer lives on every day, I think it's going to be somewhat of a fantasy dream because it's so disruptive and it's something that's so from left field that if you've been in this institution for decades, like a lot of these legacy folks who are talking on TVs have been on this talking in the space for 20 plus years, they're not gonna understand this. Like they're just not until they can like see it every day on their purchases. Like oh, type of thing. Where like, for example, perfect case study is like Robinhood, where right now you're seeing Nasdaq also do the 24/5 rule on like 24/7 trading on 5 days a week.
Yeah.
It makes sense eventually, which I hate to say this. I really don't want this to be the case, but it feels like there's gonna be a 24/7 eventually where you can trade the stock market every single day and
Yep.
anytime. Like it's going to be accessible across the board, and that's going to be really dangerous. But I think that's where we're heading towards. The issue with that is the infrastructure in place right now. You can't do the 24/7 rule. You just can't. On the blockchain, you could, and
Mhm.
I'm saying that's what these kind of crypto environment products or like the blockchain, they unlock a lot of these like derivatives of what exists right now, but makes them better. But you can't because the infrastructure isn't in place. That's a
Yeah.
perfect example of how the blockchain and crypto can increase everyone's lives to innovate even more. So that's why I'm like maybe that's another case study of like these legacy folks understanding the technology better. Oh,
Yeah.
That came out of nowhere today.
yeah. So let's see what QQQ is below their 200-day moving average. So I'm
Okay.
looking right now to see what occurred. Robinhood's down 10%. That's crazy. That's dangerous.
I didn't read any headlines about them or anything. Like what sparked
It's
that?
so I think part of it was maybe the S&P inclusion announcement that happened on
Mm.
Friday. So I think a lot of people were hoping because they qualified, they were going to get included.
They didn't make
Apple
it.
and maybe they didn't make it. And also, crypto is fading.
Yep.
It's pretty bad. And they like their crypto volume was up 700% year over year, and that was what caused them to have that massive earnings report this previous cycle.
Yeah.
If crypto pulls back, there's going to be less volume, and that is how much money they make. I forgot what it was, 3 or 5% on a lot of each transaction
Yep.
in crypto. That's a lot of freaking money if like crypto's roaring. When it
Mhm.
pulls back like this, like it's not dead volume, but substantially lower. So
Can we see what Coinbase is doing today?
I'm sure Coinbase is struggling.
I think
as well.
Vlad needs to grow his hair out again. I think that's what they need. They need to get back to their roots. They need the flow and just hit reset. All right, there's Coinbase. Okay. Yeah. I mean, yeah. Well,
I don't know. It's right now. It's just you. Oh, QQQ is down 2% now. This is going to be, guys. This is like I want to add like MongoDB's in the 170s, guys. Like I want to add. It's just like
I thought you were defensive.
that's why I can't. Like
Why
there's
not, you know?
levels- I know,
YOLO.
like YOLO.
That is not financial advice at all. Well, we're on the subject of Bitcoin, crypto. MicroStrategy announcing a $21 billion preferred stock offering, announcing plans to offer up to $21 billion in 8% Series A perpetual strike preferred stock. The funds raised from this offering are intended to generate for corporate purposes with MicroStrategy's ongoing strategy to increase their Bitcoin holdings. They're still buying, and Saylor came out saying this as recent as this weekend. So interesting move from those guys as well. let's shift to real estate quickly because we had some M&A news today, and the M&A market has not been that hot. I think Sorkin this morning was saying that the M&A activity in January was down 30% year over year, and he was saying that is like a signal of like things not great. People are a little dicey in the boardroom, but we had Redfin getting acquired by Rocket for $1.75 billion. How are you feeling about real estate in general, Shay?
Guys, I think that was so freaking bearish. If you guys don't know Glenn, Glenn's the CEO of Redfin. He's a pioneer in that space. Like what Redfin did initially was very impressive, disrupting that whole real estate sector. He's been a very big bull. Like, he has been. And whenever he speaks, it has a lot of weight into the industry because he is one of those pioneers. Him selling Redfin to Rocket is showing me the housing market is nowhere close to recovering. By recovering, I mean having volume return to that space. And I think that's also a sign of maybe where interest rates are going to be for higher for longer, or a recession might be coming a lot sooner than people anticipate. Either way, higher for longer interest rates going to hurt the consumers. Recession is going to be devastating consumers. This is not a bullish thing for me. As a read through is like, this is dangerous for like the recession narrative type of thing. And even though you see it's like up 73% today, look at the all time. Like they were at $200, I think, during
Whoa.
or $100 during just 3 years ago, and he's selling right now at $12 essentially.
Yikes. Can we flip to like Better or Zillow and see what some of those other real estate? Better's an interesting one. They're out and about a lot. I've interviewed their CEO before, but they're another one that the kind of live or die based on the housing market. All right, there you go. Yep.
But yeah, I mean, also he sold at not a premium. It was one-time sales, and you have names like Open Door who's trading at 4-time sales. So I think Open Door might be really interesting shorts from this news. So I don't know what their reaction is. Down left, what are they today? That's interesting. I'm surprised this isn't a lower. I would think this is going to be substantially lower from that news because it somewhat provided a benchmark valuation or comp in that space, and trading at getting bought for 1x when they're trading at 4x sales is scary, especially when they're at $1.19 already. Like that feels to me of like a reevaluation, a re-rating that should occur on Open Door's multiple.
Yeah, interesting. Speaking of other things sliding, Russell 2000 stocks getting absolutely smoked, down more than 5% in the last week. Small caps struggling to find support. You think growth is finally on ice, Shay?
Yeah. I do think
End
so.
of conversation.
No. The reason I think so is there's clearly sacrificing, like Trump, all his poker moves, it's sacrificing growth in the near term. And his commentary that he doesn't watch the stock market, like I think I call BS. But if there's any kind of source of truth towards that, oof, because these are the moves he's making. That's like not related to, like, he doesn't care. He's breaking things just for long-term strength. Like I think in the near term, like he might even break things even more. And this is also, we're seeing no signs or no end to the tariff wars, and it feels like it's gonna get worse. And I'm just like, the charts are breaking down. Like this high stakes poker game feels like they're gonna double down even more. They're be more pot committed, for example. Like I don't know, it's dangerous. I would get defensive, guys. I'm sorry, I just would.
Speaking of tariffs, there's a new PM in town up north, Mark Carney. He's an ex-banker, and he will be replacing Justin Trudeau. You know, hate to see him. What is the phrase? Love to see him go. Hate to watch him leave. I don't know. He's a good-looking guy. He's been in office nearly a decade, though. And here comes Carney, who's finance guy. I think someone noted on Twitter that he was once on the board of Stripe, and he came in hot this weekend, basically being like, "Sorry, United States, you're not going to bully us. We're standing firm." Do you think that's all part of this charade of just like puffing the puffery, and in the background though, maybe he's a little more business aligned, and him and Trump might be working something out?
It's a dance. This whole game is such a dance. So I think, honestly, watch like as crazy as it sounds, but like House of Cards and Veep, those are two great shows for politics. A lot of
Veep
the
is
writers,
so good.
it's so good, but a lot of the writers come from working in that space. Like there is somewhat of truth of what, even though Veep's a comedy and other one's a drama, there is somewhat of truth in the storytelling that they have on those shows. Like those type of things happen. And if you see Veep, she is clearly not someone who should be qualified for that role. But when she presents and talks in front of the camera, everyone thinks like she's on top of her game. She just knows her stuff. But really behind the scenes, it's a shit show. So I just think that there might be somewhat of truth on the Trudeau side as well. And same with Trump, where like they're saying something, but they truly don't mean that at all. They're just saying like, oh, I'm gonna egg him on, like it's gonna make me look good on this stance, but really there's no substance on what I'm saying.
Yeah.
I think that's what it is.
Veep 2, the thing that struck me, I haven't seen House of Cards, I need to watch that one, is like, yes, the politicians like out front are like stupid, but the people behind the scenes doing all of the inner workings are even like dumber and crazier. And it's like the layer below is almost like worse in terms of just like the Machiavellianism, and like that's the part where you're like, oh my God, like, is this all built on just like a bunch of lunatics?
100%. I mean, that's a scary thing, right? I mean, it's our 20% of the U.S. GDP is U.S. consumers, and the people who affect the U.S. consumers the most are these kind of agents. I'm like, something needs to change. Like that's just crazy.
Yeah.
That much of the world dependencies on these agents of chaos.
These characters. Well, let's shift a little bit outside of DC, outside of Earth, over to space. You called AST Space Mobile the American Tower of Space last year. It's up nearly 1,000% in the last year. Flirting with $33.40 a share. When did you start having a conviction about this one, Shay? And are they your top pick in the space economy?
I still think Rocket Lab is my top pick in the space economy, just because they're becoming a full-on space prime, owning the infrastructure. And I think, I don't know, it's just Rocket Lab's a FedEx of space. I call ASTS the American Tower of Space. There's completely different business models, but I think I love the ecosystem angle more for Rocket Lab, and I'm just specific towards ecosystems, as you guys are aware. Like when I find a company, their mode has to be an ecosystem. Space Mobile really became like really took off because of those partnership deals. And I think a lot, like they're partnered with every top dog in the telecom space. And it's just, again, not handshake agreements. These are real, real deals. And so the biggest flack on ASTS has always been the revenue guidances. Like the estimates were wild for ASTS that people didn't believe in them. So the reason how wild they are, like they made $4 million last year, the whole year. They're supposed to be making $2 billion in 2027. That's literally within 3 years going from nothing to $2 billion is insane. Not just that, the $2 billion, half 25% of that is going to go straight towards net income. So they're going to be producing $400 million in 2027. And if you think that's crazy, in 2028, they're supposed to be going from $2 billion, like I mentioned, to $5 billion. It accelerates drastically even more. So people are like, you're going from $4 million this past year. At the end of Trump's presidency, you're going to be making $5 billion on the top line, and you're going to be earning, $2 billion in actual net income. That's crazy. And now, with them trading at $10 billion market cap, people are like, oh, that's like way over. It's actually $7 billion market cap, way overvalued. Like how can this be worth $7 billion when they just made $4 million last year? In 4 years, they're gonna be producing close to $3 billion in the bottom line. So now they're trading at 2 times their net income in 4 years. So if there's any truth to that becoming a reality, this is significantly undervalued. Significantly. Like that's why I said like if these estimates become true, and I think these partnerships with telecoms are validating their technology and this getting closer and closer to like those estimates could be a reality. Buying it right now at was it I mean 10 times their net I mean if it goes to $50 billion, that's 10 times their net income for 2028. That's not ridiculous, especially top line growth going at 150%. But like that's why it's like, oh my god, it's like if this is a reality, it's like crazy. And a lot of people thought it was such a fantasy because you just don't see that kind of 0 to 100. You just don't.
And what I'm less deep in this one. What percent of their business is the satellite?
All of it. I
But
think all of
okay,
it.
so the Vodafone news, that's kind of what you're alluding to. That's like the beginning of this being an actual thing.
So I think it's more like the satellite to cell market is the way to think about it. So,
Okay.
for example, there's a lot of like new competitors that got brought to light past like a couple months. Like you have Starlink partnering up with T-Mobile, you have Apple partnering up with Globalstar, and you also might have Amazon and Blue Origin that's entering the space. So that all these raise questions to does ASTS have an actual moat competitive advantage when you have all these big dogs partnering up with like competing products? And the way I see it is ASTS is in such a strong position because they approach this whole satellite to cell market in a completely fundamentally different lens. Starlink, for example, is more of a direct to cell service. And what I mean by that is, like, again, they're very, very early stages of this, but they're only limited to text only. So voice and data is supposed to be expected later. So the key differences in the network design for that is Starlink relies on a large number of satellites to create that coverage, where ASTS is structured to deliver broadband from fewer but larger satellites that connect directly to the 4G and 5G phones. So there's no extra hardware, there's no extra software that's needed. That's a massive distinction. Another one for Apple for Globalstar is it's not a direct, when I read that it's a direct competitor to ASTS, like I think it's really funny because that means that people don't really know what ASTS is. Like that Apple partnership is purely for limited emergency SOS features. It's not going to be a full mobile brand broadband coverage. Like Apple has no plans to turn their iPhones into a full-fledged satellite phone. Like they have zero acknowledgement that they want to do that. It's just an extra safety feature that works in remote areas. Where again, ASTS kind of on the they're building a system that integrates directly with the carrier networks. And that means that once it scales it effectively extends traditional cellular services into those arenas that previously had no coverage at all. Big difference. So again, like I'm bullish on ASTS, but it doesn't mean it's risk free. I do think the biggest challenges they have are clearly scaling their satellite constellation because like they're going from zero to they're going from 4 million to 5 billion in a couple years. Like there's going to be onboarding issues. There's going to be scaling issues. They're going to have to secure a lot of financing, which they have $1 billion in cash, which is great to see. And their model kind of has to economically be viable at scale, which it's kind of untested still. It's too early. But from a tech and carrier adoption standpoint, they absolutely have an edge. Like unlike Starlink, which is effectively just trying to bypass telecom carriers, ASTS kind of is building alongside them. So it's making it more of a telecom enabler than a disruptor. So that disruptor could be a major advantage for as the market develops. But like I don't know, ASTS is a different animal. I think it's just a different angle towards the satellite to cell market. It's really important to know the differences.
I love when you geek out, Shy. It's great. Let's flip into some earnings coming this week. Today we've got Oracle, BioNTech, and Asana. Any of those you're watching today, Shy, in general?
Oracle, clearly, I think they're the database that's like um, Stargate Initiative. I think they're like the one that's the network behind it. Let's just say that the database that's gonna be interesting. Asana. I think CRMs are going to be disrupted by AI, but there's going to be a couple of them that are going to survive it. I think it's going to be for sure Salesforce. I think it's going to be one. I think the jury is out on which mid market's going to do well. Like, is it going to be HubSpot? Is it going to be Monday.com? Asana feels like, I don't know. It doesn't have that momentum Monday.com has. I think there's only going to be one that survives between Monday.com and Asana. I just don't think they both can thrive in an agentic AI world. We'll see today. Monday.com had a really strong print this cycle, so maybe Asana does.
Yeah,
But
Asana is like embedded deeply with sort of like tech VC, and Monday kind of went to creative industries. I interviewed
the
their
mid-market,
CFO
yeah.
one time, smart guy. They definitely have a plan. I have so many thoughts on HubSpot. I use HubSpot all the time, and like every time you do anything, anytime you grow, it just the bill goes up and up and up. And so I think they were smart in they have like special deals they cut with startups. So like some of my clients get like 50% off for a year, and then they start growing, and next thing you know, those companies aren't switching over to Salesforce when they're bigger. But it's definitely a dogfight in there for those guys.
Oh, absolutely. It's not pretty, and it's gonna get uglier. So like, I just think like, why bother? Like, I don't know. I put in the box of like potential disruption. Too difficult to tell this early on. Like, there's great companies out there like Datadog. I was probably one of the first ones to get bearish in a name when it was like, I looked like an idiot. It was at 150 like 6 months ago. I was like, I think observability will get disrupted. I just do. It just makes too much sense. I think there's more narrative now coming to light on Datadog that might be the case. Uh, I think it's really important to kind of have those theses play out early. So once you can get out of it and position yourself to other, like right now in this market pullback, like it's pulling back. QQ is down 2%. Like we're in a correction territory officially in tech. Like 12% we're down from the all-time highs in big QQQ. This is when you reposition towards the proven winners with defensible moats, not on trying to catch a falling knife on a narrative that's somewhat noisy. Like, you position yourself to clear winners because the Intuitive Surgicals, the Amazons, the Axons, like, they have monopolies on what they do. They rarely pull back 25%, rarely. And when they do, it's a macro driven reason. This is a macro driven reason. So like, you position yourself towards those names, not like the Asanas or the Mondays or Datadogs or even like MongoDB, for example. Like, I could be wrong on MongoDB. Look, so far I've been wrong on MongoDB, absolutely. But in Snowflake, for example, I don't know I'm right, but like, I've been proven the last two earnings reports that the re-rating is justified, but it's being pulled back because of the macro-driven reasons. Like, that's a name I feel it's somewhat safe. Palantir, I think everyone and their mother is hoping for Palantir to go under $50 to buy it, but that pullback for Palantir is just purely valuation. It's not anything tech related or product related. The thesis cracking. So I think those are the names, like, once it pulls back even more, you add. But the ones that are like iffy type of narratives, I just don't touch. The more speculative ones.
Yeah, is that getting into the nuance? There's debates. Is this like a generational buying opportunity? It's not that big of a pullback historically, but what you're saying is it like, yes, for some things, but you wouldn't necessarily just throw into like a SPY right now. You're picking and choosing specific winners that you think are pulling back because of the macros, but it's not just like I'm throwing it into the entire index.
Well, I think you brought up a great point. So I need to add this caveat. I have a healthy DCA plan. I put 2% cash into my portfolio every month. So I know there's cash coming if I have no more dry powder. I know, I'm fully aware, I'm not an idiot. A lot of people aren't like that. They have like the cash in their portfolio. That's literally all they have. They can't really add to it. So in those situations, I would fully go into the indices right now. I would raise cash put on the sidelines because I think it's going to get uglier. On Friday, I bought a lot of hedges, and I'm not buying this dip aggressively, as you guys are aware. Like, I want to, but I'm not because we're in a different environment. I think that's kind of the move until things level itself out and we recover technically. And the reason I'm just adding to specific names because like, I have a 7% cash position right now. If I buy today, 2% of it, I'm confident in a couple weeks I'll go back to 7% because I'm adding more money. Like, it's not an endless drain of cash I have, but like, it's if I don't buy for 6 months, I all of a sudden have a 12% cash position. That's what occurred from the month of November to February. It wasn't 6 months, but like every month I added 2% cash position, and all of a sudden I had a 12% cash position right before the market dipped, and the market dipped, and now I drained half of it. I'm not going all in. I'm still being slow, tinkering a little, but knowing that I'll have more cash coming in. That's like, it's really important to know the differences, and also time horizon. Are you investing for the next 1 or 2 years, months, or 5+ years? If it's 5+ years, there's some buying opportunities, to be honest, right now. I think it's like, if you believe autonomy is going to be a reality, I think Tesla at 240 is going to be a steal. But it's risky. Like, if it's not, and it happens in 2027, the stock's gonna get reflected on that. Same with Rocket Lab, Neutron. Like, if Neutron gets delayed to 2027, it's not gonna happen really this year, this stock would go below $10. So that's somewhat risky. Amazon at 190, I'm like, you're essentially paying for just AWS at this point. That's it. Their e-commerce side of the business, their ad side of the business, their logistics robotics side of the business is all free at 190, in my opinion. That's why I'm adding aggressively to Amazon, because it's somewhat safe stock. I know it's going to be, they're a killer in multiple growth lanes. And I think somewhat like that's a safe stock for me to buy. And same with Axon and Intuitive Surgical. I added 5 shares of Intuitive Surgical as we were talking today. Like, I think below 500, I'm okay building that one.
Yeah,
Wow,
I mean,
he was really breaking down.
I was
Jeez.
gonna say, like, let's look at, because I know we're getting to the end of the road here, but it looks like we're down 300 points in the Dow. A lot of red. Shy, do you have any like music or playlists you play when you're going through a down day?
I cuddle my dog a lot. No, to be honest, this excites me. Like, you guys only see my pearly whites. Like, I'm excited when there's like red days like this, because I've done the research. I built the conviction, the names I want to build positions in. So I have a game plan. That's why I was like, I'm not yelling, but I was just reiterating the same rhetoric in December and January. Like, have a game plan. Like, do the research. Like, right now the market's just going up to the right. That's not when I like to buy. So I built that cash position, but in the meantime, I'm not going to be sitting on my hands playing video games. I'm in the lab doing the research on companies I want more bigger in positions in to gain that conviction, because when you have that level of conviction, these dip buying opportunities, you can do it with a smile on your face. You don't do it with fear, because you know the company inside and out, and you have a thesis in it. And this pullback it's experiencing isn't thesis cracking, macro-driven reason. So, I mean, I'm installing the plan, and I have the plan already in place. There's going to be a recovery in this period. There's going to be another dip like this sometime next couple years. This is a great example of just like having a game plan and you putting in action when there's fear in the market and there's blood in the water. And that's exactly what I'm doing. I'm probably today, like, I'm going to be listening to orchestra. I love orchestra music. It's my biggest thing.
Really? A
Yeah,
little Bach, some Vivaldi, or
yeah, study playlist on Spotify, whatever that is.
okay.
I mean, my fiance always says I like breakup music, because I just like really in depth, like deep music.
Wow, you're a classy guy. I was gonna go with YG Stop Snitching or Seal Kiss from a Rose. Those are like my two, like either one of those. Oh, there's also that. For a second, I thought our producers were going to put on Stop Snitching, and I was literally about to fall off my chair, because that would not have been okay. Well, guys, we're all ready for the week. I don't know about you. We're going to be back here every single day this week, 9 a.m., right here to run down what's going on. Every day is a new adventure, it seems. Shy, thank you so much for your insights this morning, and we'll see your shining face tomorrow morning.
Yeah, we will. Stay safe out there. Don't get too greedy.
Bye, everyone.